So many people invest in all sorts of different cryptos, Bitcoin, Ethereum, all these different coins, and they essentially want to make loads of money from the investment they put into these. Now, I'm not denying that you can potentially make good returns on this. I personally don't invest into crypto or anything like that, but one thing I do understand is the price action within it, because I'm able to utilize this with other assets, such as with Forex, such as with indices and metals and things like that. And that's personally my bread and butter. But the key thing to understand about crypto is that price action can be read in the exact same way. And what I'm going to do for you guys is essentially just highlight a couple of things that I can potentially see happening on Bitcoin, and potentially give you a bit of advice on where this is likely to reverse. Now, if you look at this from a 1 hour chart on Bitcoin here, you can clearly see for a few weeks now we have been dumping to the downside. Now, I know that there's this whole thing about the halving and all that kind of stuff that you hear, and that essentially that's going to happen, and there's always a good time to be in crypto and not in crypto and things like that. And I just want to state, by the way I'm perceiving this might not be the way someone else perceives this. So there's a lot of different strategies out there with this, but I'm using the smart money concepts format towards it. So look, it's very, very bearish. Now, the idea behind anything with price action is essentially you want to be buying when price is lower. So for example, when price comes into this area here, you want to buy and you want to have some form of target, which is going to be this high here. Now that high essentially is just going to be your liquidity, and you want to get in through ideally some sort of low, maybe an area of an efficient price action or something like that. Now, in an ideal world as well, you want to measure the entire range which was created, and you want price to react from your kill zone, or at least inside your discount area, which is anything below 50% of the entire range. Now, once you start seeing price reverse into the downside, obviously the idea is that if you're going to start selling Bitcoin or selling any kind of asset, you want to sell when price is high. And essentially, you always want to be in direction with the trend. And this is an issue a lot of people can't comprehend. They don't seem to understand that price is going to move in cycles. It's going to make a high and then a new low. It's going to make a lower high, and then it's going to continue on its downtrend. Now, what tends to move price in a direction? Let's say, for example, price was moving down to here, and then suddenly you started seeing price shift to the upside again from here. Is when you look to your left, you will start to see some form of area of point of interest. So that could be an area of imbalance, that could be an order block, that could be a liquidity sweep, it could be anything. But what we want to do is identify these areas where price has the potential to react from and go higher. Because the price and the markets that you see is an algorithm that is engineered towards doing just two things, and that is seeking areas of inefficient price action and seeking areas of liquidity. So once price reacts from these areas, it's going to target liquidity, which in this case could potentially be all-time highs. But the important thing to understand is that once these highs have been swept, then it is only natural to basically expect price to reverse, because in the cycle, price needs to return to a discount area, which you can see here. So price needs to come to at least 50% to be classed as a retracement to continue in a bullish trend. Now, within this discount range, we want to look for our areas of inefficient price action. So all we're waiting for is a level below 50%, which is your discount area. And then essentially, we've hit a level, we could essentially rise from here, and the target is going to be this high right here, which in turn is your liquidity. And it honestly is as simple as that. Obviously, there's different characteristics you have to look for. There's different profiles that happen every day. If you're an investor from a swing trading point of view, so if you've invested in this for the long term, you're going to have to just endure the fact that price is going to come lower and then it is going to go higher. So, you know, for example, if you invested down here, you're going to see price dip from time to time, but then you're going to see price rise. And then after it's taken out the high, price is going to dip, and then it's going to rise, and it's going to do that, and so on. And then eventually what's going to happen is price is going to have all of these lows, which is going to have areas of liquidity under. It's going to form this liquidity type of trend line. Now, once you see that, that's going to be a target for the markets. So the markets are going to come lower. They're going to push into this liquidity. Once they've swept this liquidity, they're likely to carry on moving in the direction it obviously intends to move on. So I'm not saying Bitcoin isn't going to go for all-time highs. There's every chance it will do, but at the moment we are currently moving lower. So what we now have to do, we need to go to the higher time frames. If you look at a 4 hour, you can clearly see here this thing's still moving lower. If you go to a daily time frame, you can see we're still moving lower. If you go to a weekly time frame, it's quite interesting because the whole narrative flips on its head. And what you can now start to see is that actually we're incredibly bullish. We are moving to the upside. As you can see, I've just used the wrong one there. We are incredibly bullish. We are moving to the upside. Now, what did I say at the start of the video? The market is seeking two things: areas of inefficient price action, which is there in the form of this imbalance, and areas of liquidity, which in this case would be all-time highs. So that is the current narrative behind what could potentially happen. So if you've got, your heart set on this reaching all-time highs, I think there's every chance it will happen, but I would be keeping an eye on this imbalance, because essentially if price drops and disrespects this area, then there's every chance and likelihood that we're going to start reaching for this area of imbalance, or we're potentially going to reach this low here and take some of this liquidity that has been formed. But if we were to go to an even higher time frame and really get an ideal picture of what the potential is, again, you can see the imbalance on a monthly time frame, and you can actually spread it out a little bit more. So there is definitely downward movement for this price action here before it reaches all-time highs. You've got this liquidity which is being engineered, but obviously if it comes all the way down to here, that would be as low as it would have been since December 2022. But as you can see, if you look at this from a 3-month time frame now, and this is just really pushing it up to the upside, look at this huge push that we had all the way up, and then price came down again, and then price went higher. Now, what are the key things you can identify within this area here? Area of liquidity. As soon as that area of liquidity was taken out, price action has started reversing. As soon as we hit this area of inefficient price action, we started pushing to the upside. So now we're starting to reverse. And if we measure this range which was created, you can see price came right within our kill zone. It came right down to 78.6%, well below 50%. So it came into a discount area. Price made a new low, which is right here. Price made a new high, which is right here. That is your trading range. So if we measure from the bottom to the top of this trading range, you've got 61.8%, which is literally covering this area of inefficient price action. Do not be surprised if you see Bitcoin dropping to this level here. Okay, do not be surprised if you see Bitcoin dropping to that level there, because that would bring you into a discount area. Now, once price comes into that discount area, this is very bullish. So there's every chance we come back up here. So if you've invested in Bitcoin quite high up, which you should never be doing anyway, you're going to be on the surface of break even, in which case you should take everything out now. If you've invested all the way down here and you've endured and you've managed to endure the profit, so if you got to invest when price was this low, for example, and you got in here and it's obviously pushing higher, I would be keeping an eye on that weekly imbalance. If we violate that, I would take my profits and run, and I would wait for price to come back down to a discount. Under no circumstances would I start thinking about buying. And in any case right now, this is so high compared to where we are on the higher time frames and things like that. This is so high. I would much rather get involved in assets which are in discount areas, and there are plenty out there. Please don't think you're going to miss an opportunity because you're not investing in Bitcoin. I'm not saying it's too late to invest in Bitcoin. There are going to be opportunities in the future, but it was only 2022 when price came back down to here again. So if price comes back down to this area here in 2024, there's every chance you can potentially look to get in. That's my thinking along the narrative behind it anyway. Now, there is one more thing I'm going to show you which essentially could pivot a certain type of direction. Now, what I want to do is just show you in this sort of format right here. When you see price dropping, let me draw that again just to make it a little bit more simple. When you see price break structure or do something like that, you can see here we've swept this high and then we've started dropping. Now, if I move this over here and I flip this, you need to be looking at the pairs that Bitcoin correlates with. So this here is your Bitcoin. Now, what I want you to do is start looking at Ethereum, because essentially these two pairs should work in tandem with each other. They should correlate. They don't have to, but they should. Now, if you see a crack in correlation, which basically means if price failed to reach this high, as an example, but we did reach this high here, that would show relative strength towards Ethereum coming lower. Bitcoin would have made a run on this high. Ethereum wouldn't. That there is divergence in the market. So if you see that these highs are showing a crack in correlation, that is the potential, or is going to give you the potential for a reversal in the market. So if I actually just bring over these charts here, what can we see? This is Ethereum. This high right here, which was formed November the 1st, 2021, was an all-time high. That never got run. When you look over here at the exact same high over here, what can you see? That the high got run. So there is divergence on the higher time frames currently within Bitcoin and Ethereum. Two pairs which should correlate, because in theory, we should have made a new all-time high right here on Ethereum. We have not done that. We have done that on Bitcoin. So because these two pairs are not in correlation with each other and they're showing a crack in correlation, that would give me more of an indication that actually the chances are we are going to start traveling down towards this area here. Or at least, if I measure the entire range, tap within this 50% line and then carry on pushing higher. So hopefully you guys enjoyed this breakdown. This is just my opinion. This is how I read the markets. I do this with all the pairs, all the assets, and essentially I'm just looking for the information and waiting for my confirmations. I keep things extremely simple. I'm only really looking for a step-by-step process with a set of rules which is going to allow me to enter the market, and that's essentially where I go from. So guys, hopefully you enjoyed it. Hopefully you continue to enjoy the work I'm putting out for you. If you enjoy this, please like, subscribe, and I will speak to you all very, very soon. I will see you on the next one.